I also wanted to create more room for myself to explore startup opportunities as an undergrad. Late into my freshman year, I had met this alum who was building a fund called Chaac Ventures. I eventually joined as their first hire. I didn't know what VC was at the time, but here was like a Princeton focused fund. Princeton was like an emerging tech ecosystem at this point. We hadn't really built our startup space to what it is today. And I wanted to get in at the ground floor, but I needed the time, right? And, doing problem sets in class all day wasn't how I wanted to spend my time at that point.
Hello, everybody. Welcome to Founders Ascent. My name is Gavin. I'm joined here with my co-host BJ, and today we have a special guest named Bayo. Bayo has a very extensive background. He has a bachelor's in philosophy from Princeton. He's an angel investor in too many companies to count. He's a founder and creative director in NPC Labs, and he's also a co-host for Blitzscaling, a startup. So, Bayo, it's good to have you on today.
Thank you for having me. I appreciate the intro, and I'm glad to be here.
Yeah. So first, I kind of want to ask you about your experience at Princeton. It's really cool that you went there. You're the first Ivy League grad we've had on this podcast, I believe. I think you are. Yeah.
Sounds right.
And so it's really cool. So
An
can
honor.
you explain like your background in philosophy and kind of how that led you to entrepreneurship?
Yeah, that's a great question. So I got to Princeton in 2016. It was my top three schools, probably top two schools. My early action was with Stanford, but I got waitlisted in the third. So I got to Princeton, and it was the only school I applied to in state. I grew up in New Jersey, so I was looking to get into really good computer engineering departments actually back then. I had built a profile as a young talented engineer. I'd done engineering programs at University of Michigan and Michigan Tech. So I actually did my first year in computer engineering before I switched to philosophy. And it wasn't that, I didn't have a love for technology. I was just trying to find where I fit into the startup ecosystem. And when I got into the computer engineering classes at Princeton, I realized that my passion wasn't on the theory and, the more minutia of building these applications, but about like the experience that the customer would get at the end of the day. I really wanted to deliver a product because I had, read the biographies of like Steve Jobs and Elon Musk and the Everything Store with Jeff Bezos, who's also a Princeton grad. And I was really in love with this idea of being like a technical founder of a startup. And I realized over the course of my first years, I like explored different. I explored the Entrepreneurship Club. I was part of this conference called Envision, where I was the CFO, and we built like an annual conference for emerging technologies and people from around the world to come talk about it on Princeton's campus. I just realized that there was way more ways to be part of the startup ecosystem than one. You didn't have to be necessarily the person programming. So I also wanted to create more room for myself to explore startup opportunities as an undergrad. Late into my freshman year, I had met this alum who was building a fund called Chaac Ventures. I eventually joined as their first hire. I didn't know what VC was at the time, but here was like a Princeton focused fund. Princeton was like an emerging tech ecosystem at this point. We hadn't really built our startup space to what it is today. And I wanted to get in at the ground floor, but I needed the time, right? And, doing problem sets in class all day wasn't how I wanted to spend my time at that point. So I ended up switching to philosophy. It's a natural fit for me. Some of my favorite investors were philosophers like Peter Thiel, And Carl Icahn, he graduated from Princeton, and he was playing poker to pay his way through classes. So I loved their stories, and I knew that I had a place in the tech space, even as a philosophy major. Um, I hope that answers your question.
Yeah,
Yeah, it
no,
for sure does.
it sounds like you helped build Princeton's startup ecosystem to what it is today, from where it wasn't really there to
Yeah.
where it is now, which is awesome.
It's hard to take credit because there's a lot of stakeholders and a lot of different groups that are part of the story, from the Princeton Entrepreneurship Council to the Alumni Entrepreneurs Fund, and the Keller Center for Engineering Innovation. So I had been in that community, building those relationships as a student, and then when I switched over to the VC side of things to join this like Princeton focused VC, I could play a bigger role in the ecosystem, and I could bring alumni to campus, connect them with different groups. I could also be a conduit for the student founders to meet investors in the alumni network. So, I'd say I was there doing my part to help the ecosystem grow as a young student, probably the only student doing what I was doing at the time. And I'm thankful to be part of that history.
Yeah, that's awesome.
Okay.
And
Thank
so,
you.
if someone was a Princeton sort of founder, they had some idea, and they went to you, you could help connect them with the VCs and other people who are interested in the space and make it happen.
Yeah, I can't guarantee that you'll get funding, but I was helping them get those meetings and helping them get into those pitch environments so that they can share what they're building, putting on startup talks on campus, putting on pitch competitions on campus, bringing investors to come speak to students. Those sort of things, I think, helped make it seem real and possible for the students I was in classes with. I was also like the first generation of students to get offered the entrepreneurship certificate, which is just Princeton's way of saying minor. So I was doing the entrepreneurship minor, first cohort of students to be doing it. I was in classes with all these student founders, and I was a VC. So it was a very rare spot to be in, and I think that's how I could be like such a big asset to our fund.
And
Yeah.
That's cool.
at what point did you transition from just the connector to VCs to an actual angel investor yourself?
Yeah, that came about when I had graduated in 2020. I'd stayed in Jersey because of the pandemic. And, I wanted to be around my family and make sure everyone was set up correctly. The fund was based in LA. And, almost by coincidence, it was just better for the fund if I set up like my own LLC to manage my relationship. So I was like, on paper, a contractor. But what that allowed me to do is it provided the opportunity to explore other things with my own structure. So I found myself doing some startup advising on the side, right? And then, when you meet founders, they want you to be like an advisor, or they want you to, connect with other investors. And oftentimes, if you're part of a fund, you can't do those things, right? Because it's outside of the fund's thesis. I had a little more leeway than like the usual, I guess, junior VC. So what I had decided to do was get my feet wet angel investing a couple years after graduating. I think my first angel investment was in 2022, and this African focused company called Flary that was doing insurance. So expatriates and people who might immigrated from, different emerging economies could pay for the insurance for their family members back home. So like I understood that. I'm a Nigerian immigrant. I came to the US when I was 2 years old. But that was something my mom started using to pay for the insurance of our family members back home. So I like to invest in things that I use. I saw the opportunity and we jumped in. Now, the only reason I was able to do that, though, is because I had joined this network of angel investors through a friend, and the opportunity came to me. And it's much easier to invest in something as part of an angel syndicate because you kind of let the angel syndicate handle like the details and the term sheets, right? So that helped me get into the game. I did that a few times before I felt confident enough to start making my own angel investments and evaluating the companies on my own.
Okay. And
Yeah.
as an angel investor too, what sort of qualities are you looking for like in these founders before you invest in them? And I feel like as well, founders oftentimes will sort of over exaggerate their capabilities because they're very optimistic and they want to make it right. And so like, how do you help filter that out too? Because I think that could be kind of blinding when you're making a decision.
Yeah. That's a really good question. The first part of the question is, just evaluating these angel opportunities. So, I mean, the same thing applies whether you're, I guess a seed stage investor or you're the first money in and you're an angel investor. You want a strong team with credibility in the space that they're building in, whether that's they've done research in the area, they've built a company in that area in the past, or they have a significant network in that area. That's going to help with the go-to-market. It's going to help with their recruiting. It's going to help with their customer action. You also want uh, so I guess the uniqueness of their competitive advantage, right? Because oftentimes people will think like, I'm the only one doing this. Chances are you're not. If you thought it was a good idea, then other people thought it was a good idea. But if you have, like your uncle, let's say you're building a fintech company and your uncle is like a senior executive at JP Morgan, and you can get into the building and have like them as a customer early on because of that relationship or because of that, history, right, within your network. Those are sort of things that I would look for. Like I remember I'd invested in a teenage founder and everyone would be like, why would you invest in like a teenage founder? It was because he had gotten this billionaire from Canada in the same, field that he was, building in to co-sign and invest in him early. And to me, that was like a huge signal that this is like not your regular 16-year-old, right? And then, his work ethic, his ability to recruit people older than him, like leave what they're doing to come build what he's doing, was super. So I look for those sort of signals because it's going to be a tough road ahead. You're going to need the right network of partners, investors, and support system to get through it.
I mean, like you hardly mentioned the product, you hardly mentioned the timing, you hardly mentioned the idea. For you, it's all about the network and who you can get to work with you and make it happen.
Yeah, and timing and product are necessary, right? You need to be in like a growing space. It's got to be on an incline, like on a trajectory up instead of a trajectory down. But to me, those are table stakes. And then product, I think, is it's definitely super important. A lot of the times, right, with the companies that I've invested in, these are not like consumer products. These are like business to business or software that other businesses are using. Um, so their ability to solve a problem for those businesses, I think, well, one, you got to identify the problem. Two, you've got to, at least find like a hard code solution to solve it. But then I think if you can recruit the right people around you, you'll actually be able to build it. If you spend all of your time focusing on the product and the features, there's no guarantee that you'll still be able to bring it to market.
Mm-hmm.
That makes a lot of
Yeah.
sense.
Yeah.
And so, with that, and sort of doing these B2B businesses and selling to these companies, how often is it that someone has like worked for that company before and they're building something now as an external person to solve it, versus it's just a problem that they know exists and they're hitting up those types of companies, but not a particular company?
It's usually the former. It's usually that it worked like 15 years in this space, and there's just this issue with, and it can be very deep, in terms of like where they go and they solve this problem within the stack. But only really they can recognize it. So you'll get those make the VCs the most comfortable, I'd say, because that and like a repeat entrepreneur with prior exits. Simply because like one, you have the network to actually bring it to market and get those pilot customers. But two, like the IP in your head and the experience in your head with these issues make it very hard to replicate and very hard to find someone, especially if it exists at like the intersection of disciplines. Sometimes you'll have someone who's, very good at like the technical part of it, right? And understanding the technical issue. Um, but they also understand how the industry is moving, right? And where other industries intersect, maybe because they have experience with both. So then they catch the opportunity early, and they can at least, have some time to build it up, right, before anyone else really comes and gets like a full grasp of what they're doing. So yeah, that's very comfortable for investors. Yeah.
And I'm interested though too, like what are a lot of these small startups doing to scale? Like how are they finding their target audience? Like what do you hear that a founder says during a pitch that makes you think, wow, like this person's going to do a really good job scaling, scaling from the MVP to
Yeah.
growing?
Yeah, that's another great question. I guess what I want to hear is, there's I guess there's a couple different angles, right? If it's like uh more of like a consumer facing product, then kind of what I'm looking to hear is that you've got users, you've got a wait list. um you can hardly get people to stop signing for that wait list. um you're going out and you're making opportunities, whether you're going to in-person events. You also update your investor base frequently. I try to make a habit of sending out like an update at least once a month. Sometimes more frequently if it's just that period we're going through a lot of different updates. So that sort of motion lets me know that you can actually scale this. A lot of people I think that all that will come, but I think you have to be doing the work to build up that pipeline ahead of time so that when you have the product ready, you can actually get people using it right away. And then on like the business to business side, like the ability to win corporate partnerships and corporate buy-in is important, and a lot of that is built off of who whether you like it or not. Your ability to recruit advisors within that space too, that actually can contribute in terms of partnerships, relationships, opportunities, LOIs. So like, getting letters of intent from these different potential pilot customers, even if it's, for a portion of the revenue that you charge otherwise. That's still an important step and shows that, one, people want this and you can actually win them over. So those are just early signs, but I think being able to watch that founder be consistent over a period of time, when the dots become lines, I think people say, you can actually see the trend line going up through the frequency, how they're able to build these revenue opportunities. That's a green flag.
Yeah. So it sounds like it's very results based, very black
It
and
has,
white. Like you've done
yeah,
this, and that.
it has to
Okay.
be. Yeah,
And talking
yeah.
a little bit about trends there, what sort of trends are you seeing from a VC perspective for what startups you expect will do well and have maybe an easier time?
Um, you know, Ever since the last couple of years of VC with like the Silicon Valley Bank crisis, FTX and SBF and the collapse of the crypto sector, and then all the um, the post mortem of all of that, and like its effect on VC and their ability to raise funding from new investors, as well as the market environment like taking a downturn and like during the pandemic, and then lagging during the post pandemic. It's really been like a shift back towards fundamentals. So now, like, if you're not generating revenue, it's very hard to raise money. If you don't have defendable IP, and that could be like, you've got multiple like high level experts like PhDs on your team. Like for example, in AI, like the criteria to be like an investable AI opportunity is super high, right? You have to have like an AI expert that's credentialed on your team now. Like it can't just be it can't just be like how to use these AI tools well and you've cobbled things together. So I think that has made it like harder to raise VC. It's made valuations more reasonable. It's ultimately good for the market and the space. Uh, I think it's also helping founders understand that they have to get the revenue and profitability without investors. Like there's not an endless blank check anymore. And I think that's making people more resourceful and actually more, serious.
Yeah.
Yeah.
One thing I'm interested though too is the valuation. You said something
Yeah.
about that. How do you value a startup? I'm taking a business valuation class right now, and it seems very hard to value a public company. A private company is very hard, and then you take something like a startup, and that makes it even more difficult. So what are some practices that you use to value a startup?
Yeah. So, I'll preface this by saying that startup valuations can be very, what's the word? All over
Pseudoscientific?
the place. Yeah. Yeah. But for lack of a better term. So, I mean, what you tend to do is you'll go on like Crunchbase or PitchBook or one of these other data platforms and look for comparable deals. So
Yeah.
startups that had similar teams, similar ideas, and what other investors were willing to pay for those companies at that stage. That's the most common way to do it at the early stage because you're right, there's not a lot of information to go off of. There's not like a ton of revenue. There's not a ton of traction at all. Maybe they're pre-revenue and pre-traction in the market. So you're going by like, okay, here's what this other credible fund was willing to pay for a similar deal. You also, as a VC, you can get a sense of how valuations are shifting based off of like what some of the industry leaders are doing, like YC companies. I'm sure any VC that's active and like gets a look at YC deals, they're probably not raising at like the $20 million double digit valuations that you saw like 5 years ago pre-pandemic. I just it's very tough to do that right now without any traction, right? No revenue, and I'm sure even the criteria to get into these programs are much higher now. So it really is more of an art and a science. And honestly, the reason why it's all over the place is because you'll get investors that don't care about valuation or price, that will follow on whatever the lead investor is willing to do. A lot of investors are follow-on investors and not like lead investors, so they're not setting the price. And that's how things, can get kind of out of hand,
Mhm.
over like a period of time because people aren't really asking enough questions. Um, and then right now, like because founders are uh, probably a little more, I don't want to use the word desperate, but they might be a little more in need of capital than years prior. Like they're probably willing to go take like cuts on their valuations to get the funding that they need. So investors are in the power position to like negotiate down as well.
Okay.
So that's how like valuations start to level out too.
Why do they need more capital? From my perspective, it seems like we have access to more free tools and more resources than ever. And so, what exactly are they
Yeah.
spending that money on?
um, a big part of it, to be honest, is probably salaries.
Okay.
Um, like bringing on engineers, and different team members. That's probably where most of the money goes. Um, and then growth, like being able to uh, uh, outspend the competition to get in front of the customer and win them over. So customer acquisition costs can be very high, especially if like you're going through like a recessive environment. I'm not sure if I'm saying that right, but like consumers are harder to win over, or businesses are going to spend less because they're feeling it in their pockets. You might need more money to actually win customers now. So that's probably the two places it goes to the most. But you're correct. Like I think Sam Altman said in an interview, there's the first $1 billion one person company is probably going to come this decade. I agree with that. I think with AI coming and all these tools out here, like you can do less with more. I've certainly, been able to accomplish that with like NPC and like just having like a small team early on. So yeah, if you're resourceful enough, you can get by without it. But uh, nothing. It's hard to beat like someone with a lot of capital to spend.
Right.
Yeah, because they could get a lot more talent. Yeah, I mean, it does seem like I was listening to a Nathan Lotka podcast, and he was talking about he was asking like how much money are they burning through each year based on like salaries because it
Mm.
because to get the good talent they have some sort of opportunity cost, right? And so they can't
Yeah.
just sit there getting minimal money for years and years to come. Like there's going to be a cost. But do you see people take out loans just to pay salaries sometimes? Have you seen that?
I mean, I've seen people max out credit cards. I've seen loans are probably, loans are probably being taken out at times. Those are the stories that people don't want to talk about, but it definitely happens.
Yeah.
Multiple founders, when I've like advised accelerator programs and things like that have been there, right? And there's probably founders we look up to that have had to do something like that in the early stages when they're trying to get things off the ground. So the reality of it, you either have to meet payroll or, downsize the team. So people will do whatever they need to do to get through it. Yeah.
I could definitely see the sort of idea of social networking someone out of the business just because you couldn't pay them, and finding a loan of
Jeez.
finding a loan a preferable option to pay them. So it makes a ton of sense. Well, it makes sense that needing to pay developers, and that's why they need capital. But I think I'm starting to notice a theme with you is you're so heavily on the people, like across the board. It's about the network, it's about the employees, and it's about who you know and who's going to help make it happen. And that's super interesting. A lot of other
Thank
people,
you.
yeah, a lot of other people nerd out about the tech, which I fully support. CS major, fully support nerding out about the tech. But at the end of the day, all of like the sort of community exists for the people. Either because someone wants the freedom to get out and be able to do what they want, or because there's a customer need that's not being met that someone needs to fill. And so I don't see enough of this people first approach to entrepreneurship, but I'm seeing it with you.
Mm. Yeah, it's a great point that I haven't that you're bringing to my attention. And I would have probably, when I was first starting out as a startup enthusiast person, said that it was all about the product and the tech and the uniqueness of the idea. But after you see like better products lose, better technology not make it, but you see like a startup that was very well funded and over invested in their network make it, you start to adjust how you think about the way the world works. And there's people who like can make a phone call and like close around. And then there's people who are very, very smart and very, very, talented, and they struggle to raise, right? And, what I learned over time is you need a balance of both. And that's usually the answer. It's like a balance of these multiple competing forces. So yeah, it's, and then when you also learn that like there's other things that you wouldn't expect that are the reason startups fail, and a lot of it is like co-founder drama and being unable to sustain and like keep the team on board all the way through like the tough times. A quote that I love is, a business fails when it like runs out of options, right? You think it fails because like people didn't like the product, but like you know um it's honestly like you have a shot as long as you have an option. And if you don't have the right relationships and support systems, then you'll run out of options. Like I've had founders that I really love who told me like, yeah, I was down the wire and I called like my old boss, and like he helped us like put the first check in, and that like kept us going.
That's
And
cool.
it's the reality. Yeah.
Yeah.
I think I heard from a TED talk. They analyzed all the different reasons why startups fail, and the number one predictor of success was actually like this feeling of empathy between team members, above timing, above product, above talent, above everything else. It's just being able to empathize and trust your team, and that's what they found made the most successful. Which super interesting. Because that's not something that comes to mind when talking about, you know, I have a startup. What do I need? I'm not sure how far down the line empathy for team members is, but it probably for a lot of people doesn't make the list.
Yeah. That's been my experience, at least. Yeah, it sucks, but I've seen like great teams fall apart, and like that's the reason the company can't continue. Um, and then you see the opposite case where it's like maybe uh, a team that's not as stellar is able to come together and is greater than the sum of its parts, and are able to like knock it out of the park.
Yeah. What do you think is one of the driving factors in teams falling apart? I've I heard this thing from a video. I don't remember where it's from, but it was saying that uh, you don't know who your real friends are until the money hits the table. It's like once the money hits the table, then people start doing weird things. Because before it was all play, there was no money involved. You guys were doing it for fun, and then $1 million hits the table, and people start to do some crazy things because of that.
That was a Noah
Um,
Kagan interview.
yes, that's what it was.
Yeah, it's like people not putting in it's sort of like a school project, right? When you have one person doing most of the work, and then the other people are kind of coasting off of that one person's work.
Okay.
That imbalance in roles and imbalance in effort can be like a big reason teams fail, right? Maybe one person is full time and everyone else is just like, this is like their side hustle. That can put a lot of strain on that one person, because he has the most skin in the game. So this is like, his entire world, right? And if other team members aren't taking things as seriously, it can cause friction. Um, there's that. There's also like I think ownership, right? Some people might have like a ton of ownership and like aren't able to share it with like new team members, and that can cause like an imbalance that plays out in like the real world. um you know uh and then there's times where like someone else has like too much ownership, but doesn't like contribute like the way that other team members are contributing. So you'd hope it doesn't come down to that, right? You'd hope like these discussions can be had. And it will also like be a point of contention with investors if they see that imbalance, right? And it's not represented in the cap table because they want team members to feel incentivized and aligned in the long run. So they want everyone to be properly compensated for the time and energy that they're putting in. So these things matter, you know, and it's important to be transparent and consistent upfront.
Okay,
Yeah.
that makes a lot of sense.
Is that the key to it? Is at the start having a discussion about ownership and expectations of work before it becomes something that where the money's starting to hit the table and everyone's trying to grab a piece for themselves?
It's definitely a huge piece of it. You know, things do change over time, and you have to be able to address those changes as they occur, right? So I think communication, as cliche as it sounds, is like super key. Like it's okay if you know, there's times where one co-founder has to do more work to cover for the other co-founder. Like as long as those there's communication there, right? And then balance is restored. You know, I think most people are pretty um, understanding, right? But it's easier to understand when you like when that person's like reaching out and like being proactive, right? I think having like a proactiveness towards addressing any concerns is like a really useful skill. It's a soft skill that a lot of people wait till, you know, too much time has passed for something to be addressed. And look, I'm not perfect at this either. Um, but these are the things like you start to learn over time. And you know, some people might call it like building emotional intelligence. I remember like this, I think it was a Stanford grad said to me, he's like, what ended up being like the most important course he took at Stanford was organizational management. Like not the engineering courses, right? None of that. Because once you get into like very big corporate structures, or let's say you make it to that point, being able to manage people at scale is what sets like, you know, companies like Apple apart, right? Like there's a lot of moving pieces within that company and people are behind it. Like at the end of the day, it's just people. So you have to be able to really organize that and like have it all play together like an orchestra.
Yeah. What you were talking
Yeah.
about before literally sounds like a relationship or a marriage in a way. It's like once a problem comes
Yeah.
up, you need to address it right away or else it's going to turn into something big. Or
Ex-
like, hey, the husband's putting in more work than the wife or something, and the husband addresses it like, hey, or something like that. That's literally what it sounds like. And I guess that could be attributed to like all relationships in general, friends, coworkers, husband, wife, you name it. Um, but yeah, I think that's very, very important. Um, Pretty much what you
yeah.
were just talking about, I think.
Yeah, that's a great point. It's you know, and you don't always think these things matter, right? Especially if like you're building something with your friends, but time and time again, right, it always comes up.
Yeah,
Like
for sure.
it does, it always comes up. So I've just been I've gotten better at trying to address those conversations. Um And look, you even if you do it imperfectly, like there's power in the attempt to like communicate and have and reach out, and like that goes a long way.
Yeah. And speaking of relationships, connections, and all that, and people, I want to talk about your podcast that you're co-host of. So how did you get into that?
Yeah. So I know and sorry about the background. I'll turn that off. But I know the co-host of Blitzscaling, Julian, from my days as a VC. We evaluated his last company, and we stayed in touch. And when I transitioned from my last VC organization to what I'm currently doing now, I had launched a newsletter and started creating content around around not podcasting, but like a newsletter, and started posting like startup content. I saw Julian had already been co-hosting Blitzscaling for a while, and he was looking for someone to come in and lead a new segment for younger entrepreneurs, first-time entrepreneurs, and investors, and tapped me to co-host some episodes with him. I brought in some founders and investors from my network that I thought would be great to interview. And we got to the point where I was leading the segment and then took over the segment while he goes and he leads the main show with Chrissy, who's the co-author of the Blitzscaling book, the best-selling book, alongside Reid Hoffman. So, Reid's team has a finger on the pulse of what we're doing. Chrissy's heavily involved and interviews, our most high-profile guests. And then I've been able to build out this new segment, for entrepreneurs like us, founders, people that are in their first few years doing this, and have them share like their insights and challenges with people who haven't either started yet or on the fence, or maybe they're going through some of the same challenges themselves. Yeah.
I like it.
And with that, it's super interesting to see. I haven't seen this happen before, where they have like essentially it's like two different podcasts under the same roof, where there's the Blitzscaling main and then your segment. Is that how it works?
So it's sort of like becoming a network with multiple hosts. So the best way to kind of see like the difference in episodes right now is like the branding. The segments that I've been doing have like the red thumbnail, and Chris's and Julian's segments have yellow thumbnails with red letters. But there's also like the subject matter as well, right? Like Chris and Julian will have their own separate like short episodes where they focus on like just different startup topics. Like they'll focus on whether building like with your first co-founders, recruiting a team, whether like you need to have a remote first company in 2024, or like have like in-person working spaces. So these are like just different startup questions that they answer. And like, it's really Julian picking Chris's mind, because Chris has been, in Silicon Valley for decades and has been like really part of some of the biggest deals, and, knows really great people. So he has a lot of insight. And then, we have the interviews. So my segment and Julian's have kind of now become like interviews. So I'll like bring on a founder, an investor, an entrepreneur that I really like, and I'll just, get to ask them questions about the journey from like the beginning to where they are at now and what their focus is and challenges have been, throughout the whole life cycle of what they're building. Um, so that's how we've been able to separate it out. But what it does is we're able to produce more because like we can work asynchronously. And yeah, it's been great.
Yeah, that is a cool concept. Having multiple segments under the same name definitely is going to allow you to have more content. BJ and I were thinking about doing that at one point to increase content. Just kind of split it up instead of us being on the same episode at the same time. We're still thinking about it, and so hearing this is cool. So it's giving us optimism here that it may be a good idea.
Yeah, it reminds me of Crash Course with John and Hank Green.
Yeah,
And
exactly.
they're sort of
I love that channel.
yeah, love it. And just their ability to produce content on everything by bringing in different hosts and being able to have multiple different shows running simultaneously. Awesome.
Yeah, it is a cool idea.
Um, I guess my last question for me is going to be about NPC Labs. We didn't really touch on it beyond, but maybe you have a brief sort of description of what you're up to there and how it can help people.
Yeah, absolutely. So at NPC Labs, we're developing a one-stop platform for content creators, artists, and brands to scale consumer products. But these products come with digital collectibles embedded that can serve as like an access pass to your ecosystem. So we've curated a network of suppliers that can white label different things, everything from apparel to marketing materials to accessories to figurines and toys, 3D printed objects. There's pretty much no consumer product we can't cover with our supplier network, and they've worked with brands like Amazon, Sony, Puma, Adidas, Urban Outfitters, Tesla. So they've worked with some of the best brands in the world. And we wanted to democratize access to the same infrastructure suppliers that those brands were using, because we see, this creator economy segment emerging with podcast hosts like yourselves. I've written a newsletter, I've produced content for over 5 years. And the power of being able to scale direct to consumer products can put of you as the creator and the business. So that's where the idea started. Now I've been collecting like this digital art since 2021. I was investing in crypto in 2017 during my first early days at VC. So I've seen how the space has evolved over time. And the same sort of trends that I saw with initial coin offerings back in 2018, I saw with like the whole NFT cycle in 2021. So I collected, but intelligently, like based off of who I felt could build like lasting brands and IP. I was disappointed by the inability to scale with some of these projects, the lack of commitment to roadmaps or these different things. But a lot of them were like, this is the first project or the first thing they've ever done that was like this successful. So you find that to be the case with a lot of artists and a lot of content creators that are able to build these massive online communities, but kind of don't know what to do next with it. So we'll come in and we'll help not only like find the right consumer product for you, but also design it. Like we have a network of designers as well. And then we have the fulfillment infrastructure too. Now the end goal with the collectibles, they're attached via an NFC chip. And this NFC chip is the same thing that Apple Pay uses. But when you tap your phone to the chip, it'll pull up a digital portal where they can access more content and information about your brand. And I'll
Whoa.
send you guys a demo after. Yeah.
Yeah. So
Wait, that's
So
so cool.
yeah.
so it's not a like receipt they're getting with the T-shirt or the mug that they buy. There's a chip actually in the mug. That's wild. Awesome.
Yeah.
And
Yeah. And we can do it with different form factors. We could do it with like we could sew it into like a tee. We could, use a sticker. We could embed it in different ways. If we can embed it with like a zip tie tag, that's the NFC component. There's so many different ways to embed it now. But we're sort of like building like smart products in a sense, right? Because there's a lot of experiences and things that we could attach to those products. Right now, like we're working with music artists that are using it as concert tickets. So like you buy the product, you get the digital collectible, and it gives you access to their upcoming concert or tour. And we've worked with content creators, we've worked with fine artists that sell for like Sotheby's and Christie's. There's some things I can't like announce yet, but this week is NFT NYC 2024, and we have 3 different events going on and multiple announcements. We've also been able to attach like AR experiences to these different products, whereby which like you tap the chip and you access like a 3D version of the product that you can use as like a Pokemon Go like experience in your physical space. So we're building a bridge between like physical product and the digital.
Okay, so when you scan it, are you accessing an NFT? Is that what it is, or?
So it'll pull up like a portal, like it'll link out to like a destination, and in that destination, you'll be able to collect a collectible, and there's also going to be like token gated experiences attached to that collectible, but there'll also be like general information, like if you wanted to put like an exclusive podcast episode on the portal, like
That is so cool.
Yeah, we can do that.
especially for concerts, that's one way to get everyone to show up in the same T-shirt.
Yeah.
Oh, that's smart.
Everyone has to buy the T-shirt to get in, and then
or a game.
Yeah. Right. I love it. And what does NPC stand for?
So the MVP that we first created to test with the NFT space was called NFT Print Pro. And then we, built NFT Print Pro Corporation. So that's where the NPC came from. But we, NPC is such a cooler title. So we shortened it. We also needed to have a name that represents online culture and is more forward looking than just the NFT space. NPC is a saturated term now in culture. We kind of see it as a blend of like all the teams' backgrounds. Like I grew up on the internet, you guys grew up on the internet. We work with a lot of people that come from those same communities. Like we're doing stuff with the gaming community. We're doing stuff with digital artists. We're doing stuff with music artists. So it works well with all those groups.
Wow, that is such a cool idea.
Thank you.
Yeah, like this online component to these physical products is so cool. This sounds like a Gary V thing.
I mean, I hope he takes note and wants to work with us one day. That'd be a
Yeah,
dream. Yeah,
That's awesome. Yeah.
yeah.
Well, I know we're about at the end of time,
yeah.
so let's hop into rapid fire. And maybe we need to do another episode just on NPC Labs because it sounds like we missed out not asking anything about that. Um,
I'd love that
yeah,
anytime.
awesome. Well, so rapid fire, generally we say about 30 seconds per answer and just make it quick. The first one is how much sleep do you get?
Um, these days I'm getting about 6 hours. Um, I tend to go to sleep around 11:30, like 11:30, and waking up like 6 now. Now, there's periods where I'll like go and sleep earlier. I try and sleep at like 9 and wake up at like 4 to get to the gym early. I'll be honest, the past month in preparation of our upcoming events, I've lost sleep. So I haven't been able to go to the gym early, and I've tried to switch to the evenings. Yeah.
Awesome.
What's your favorite book and why?
Um, the Everything Store about Amazon. Um, I think it's by Walter Isaacson. I could be wrong about that, but um, I love it because Jeff is my favorite entrepreneur. I love his thinking around the long term. He's also a first principles thinker. Um, I I thought his story of creating Amazon, starting as just a book company, and then this vision of creating a store where everything is available with unlimited inventory is a beautiful idea. And I'll be honest, I've taken inspiration from it with NPC Labs.
That's great. Uh,
Yeah.
what's your top piece of advice for young people? You're pretty young
Um.
yourself, so
Yeah.
let's go pre-adult. Let's say you're 17, 16, and you want to be an entrepreneur.
Um. Go go work with an entrepreneur. Do whatever he asks you to do within reason, right? And without it, being compliant with labor laws, but just go be a fly on the wall, be an apprentice for a bit. It's much easier to take a front row seat than taking on all the risk at first. I learned from being around entrepreneurs. I was an apprentice at my last fund, working with this older alumni and getting like the front row seat of what it's like to be an emerging manager. So it's the best seat in the house. And while you're young, people will let you through the door. So take advantage of that.
What's most important to you in life?
Um, Number one is God and uh, I guess my faith, because I think it's deeply related with my purpose. Um, like for me, I think we're all given gifts and talents and a unique perspective that we have to bring into the world. And I almost feel bad if I don't use these gifts to the best I could possibly, provide or bring them into reality. So uh, that's where my relationship with God comes in, because you got to have a lot of faith to build the future, right? And then next is family. Um, yeah, my family is my support system. They're why I do a lot of the things. It's why I'm even, able to be in this country, is because of my family. So I'm very appreciative of those two things.
If you could change anything about the world, what would it be?
Ooh. Um, if I could change anything about the world, I'd make it so you didn't need a formal education to guarantee like your position in the world. Like, you know, although I went to Princeton and like that opened up a lot of doors, um, a lot of people tell me like they wouldn't know I went to Princeton if I didn't tell them, right? And it's because I tried to like remain down to earth, and I don't think it's like the most important thing I've ever done, right? Or will be the most important thing I ever do. So I think people overemphasize like credentials and the college you went to. And I think if we could get past that, there's a lot of talented people with a lot of potential that could bring like a lot of unique ideas to the table, but they never get a shot.
How do you want to be remembered?
Ooh. I want to be remembered as a good person who uh, was a man of his word and tried to um, do something different, right, than most people expected of me, right? Like, and I when I was reading Steve Jobs' biography, he talked about leaving like a U-sized dent in the universe. Um, and I want when people look at like my legacy, it's like, oh, that's something like that only Bayo could have done, right? Like I want it to be that unique to me. So yeah, I just want people to know who I was, right? Or who I am, not like the the logos or any of the things that were attached to my name during my lifetime.
I love it. Bio, I think that's a great place to leave off. Just with being a good person, I mean, this discussion has been just so honest and humble and so focused on people and just understanding what it takes to actually succeed and do stuff. So thank you for sharing all this with us. It's amazing. Uh,
Thank you for that.
where you mentioned having a ton of amazing announcements coming out this week. Where should people go looking for those?
Yeah, thank you. So if you go to at MPC underscore labs on Twitter, at MPC Labs on Instagram. We're also at MPC underscore labs on YouTube. You'll be able to find all the information on us. Also, MPC Labs.xyz. So if you find us on one of those channels, you'll find us everywhere.
Okay.
Um, and yeah, you can access me on all platforms. I'm not too difficult to find. If you find MPC, you'll probably find me close by. So yeah.
Awesome. Yeah, we'll link to all that, and then everyone listening, be sure to connect with him because he's got something cool coming, and I want to see it. So I'm sure you do too. And we'll see all of you guys next week, Tuesday at noon. Don't be late. We'll see you there.